the buy now, pay later and the instant loans are very easy to get. What are the steps or the precautionary things for your consumers so that it doesn't really affect their CIBIL score or the credit profile?
Ulta hai. Buy now, pay later will help you build that credit profile.
Are there any efforts that PayU Finance is taking to educate your consumers on credit health?
We had initially started with a product that we rolled out called Credit Shield, and then we realized looking at your credit score, unfortunately for many customers, is like a visit to the dentist. You really don't want to see it.
Hello everyone, welcome to our YouTube channel. In today's podcast, we are going to talk about a very different topic which affects millions of Indians and which is first-time borrowers. In technical lingo, we call them new to credit or NTC. In today's digital economy, taking loan is very easy and fast, but it comes with a huge risk of overdoing it. Today we are going to talk about while borrowing is so easy, but are we borrowing it wisely? To dive deeper into this conversation, we have our special guest today, Mr. Deepak Mendiratta, CEO, PayU Finance. Hi Deepak, welcome to our podcast.
Shefali, hi, thanks for having me.
Let's talk about a bigger picture. Like PayU Finance is a well-known brand in the credit space, right? And overall the finance products. And you having a long-standing experience in the financial space, what are the big changes that you have seen in the credit space in last few years, especially with the new to credit, which we say the first-time borrowers and the young borrowers coming in?
Yeah, Shefali, it's been evolving at a very fast pace. So what we've seen is we went into COVID. The industry contracted a little bit. Suddenly lending into new to credit segments went away. And then we came out of COVID and went very gung-ho into the segment. In the last 2 years, as the regulations changed, it's become a little tighter. The core question in this segment for every borrower, if I am a customer, for every borrower to think about is three things. Can they bite off? Can they chew what they've bitten off? So can they repay the size of the EMI that they're taking? Do they have the discipline to repay? And then if they're taking long-term loans, do they have the stability to last out? So you're doing a home improvement today, but you have to repay over 3 years. Your house can grow old after 3 years, but your EMI is still on, right? And those are the factors. Typically in this segment at PayU, what we do is we have two separate segments that we cater to. One is where on the consumer side, we start customers with a BNPL product. It's really bite-sized, it's really small, it's really 1,000 rupee, 2,000 rupee. It's high disciplined, you have to repay in 15 days or 30 days. So you're not really getting into a core credit product until you build the muscle to say that I can handle this credit product. On the other side, we are also looking and lending to merchants and in the merchant ecosystem. This could be a shops around the corner. This could be people who just have the cash flows but no access to credit, and then providing them again bite-size access to credit, not long tenure, keeping it short, but building the ability for them to be able to pay back. That's the philosophy that we look at when we look at new to credit. Everything else you said is holding true. Easy journeys, digital, simple to access, but with these caveats that we apply because we think we can help the customers initially by forming that muscle, and then over time they can figure it out.
Sure, I think that's a great overview. Thanks for that, Deepak. Let's change the focus to buy now, pay later, which is, I think, increasingly getting that popularity, and so is the instant loan. While the buy now, pay later and the instant loans are very easy to get, and at the same time, I would say it's very easy to overdo it, as you rightly mentioned. So what are the steps or the precautionary things or the guidance that PayU Finance is driving for your consumers so that it doesn't really affect their CIBIL score or the credit profile?
Okay. Ulta hai. Buy now, pay later will help you build that credit profile. See, typically what is there are variants of buy now, pay later. There is the absolute deferred payment. So I have customers who could be between 25 to 30 years of age, will not get a credit card. But you're on multiple websites, you're ordering food, you're ordering movie tickets, maybe slightly higher ticket. You could be purchasing and doing a hotel room for booking for an overnight booking. And and it starts with a journey which is just deferring the payment, creating an ease of payment here and now, because there is informal access to a credit card. And that's a very large part of India, right? So 40 to 50 million Indians have a credit card out of the billion odd. But take away the billion odd, take away the digital customers in India. Out of the 300 to 400 million, only about 50 million have a credit card. So now for the rest of Indians, as you think about them, the ability to access simple credit is where BNPL starts. It's the deferred payment. Don't pay in full today, pay it in 15 days, pay it in 30 days. Very simple cycles. Convenience of payment is very high. From there, it goes into your core BNPL, which is pay in 3 EMIs, pay in 6 EMIs. Again, hard to get over leveraged, because typically the industries where you see this happening are focused around consumer durables, are focused around insurance. So purchases where the ticket size isn't necessarily going to come in. So to me, the conversation is actually the opposite. I think these products actually will not over leverage you. Typically, these products will help you get into the space of building your credit. If you get into the space of over leverage, you'll find out very fast. It's not the place where you'll take 10 loans, get massively over leveraged as a customer. In 3 months' time, you'll know that there's stress building up. In your EMI repayments, you'll be able to actually work out of it also pretty quickly.
I think that's a very clear perspective. Thanks for that, Deepak. So moving on to my next question, Deepak, talking about credit education, are there any efforts that PayU Finance is taking to educate your consumers on credit health?
Yeah, we had initially started with a product that we rolled out called Credit Shield, and then we realized. Looking at your credit score, unfortunately for many customers, is like a visit to the dentist. You really don't want to see it, and we started getting that feedback. So fear seemed to be the buzzword around credit, which is, hey, go check your score. Something could be going wrong. Something could be going bad, and so on and so forth. So we dialed that back a little bit. What we do now is we do tend to in marketing tell our customers around how they can build their credit history with some of these products, but also typically then working with, of course, with CIBIL, the ability to offer credit reports to the customers through the D2C product is something that we go very big on, and then being able to advise customers through different marketing interventions, but also FAQs, etc., around how to do it. There is a typical philosophy to be borrowed, which is to be followed, which is how much do you borrow, and how much is the size of your EMI, how much do you keep as a buffer against that, and how much of a credit line utilization you should have, right? So there is the 50-30-20 rule, so to speak. Your EMI should not be more than 50% of your disposable income. Your credit lines, you should not use more than 30%, and you should keep a 20% buffer on whatever you do. So the 50-30-20 is sort of what we try to get out to our customers in different forms, and talk to them through our marketing and through our FAQs.
I think that's a very meaningful insight and education, the rule of 50-30-20. And in a nutshell, it definitely reminds that the CIBIL score is not just a 3 number, but it's a passport for a bigger financial opportunity. Yeah. Moving on to the next question, let's zoom out a bit in terms of the period from pre-COVID to the current era of AI. Are there any particular innovations or evolution that you see in this credit space or in the coming years that will have a great impact?
I think one of the things that's changed in the last 5 years. So let me take that back. The AI is a short term that takes into account many things. Yeah. Machine learning was and has been a very large part of the credit ecosystem. So not just last 5 years, but last many years. Even before it was called machine learning, basic logistic modeling has been a part of the credit ecosystem. So I think that's been a constant evolution. It's heavily in use and in constant evolution. AI has added certain dimensions to it, and in some places now heavily used. So for example, within the collection space for us, AI in different forms is heavily prevalent. The simplest one is calling customers. where it's beyond strategy, it's beyond data. But one of the things you realize is customers do not like to be reminded that they are late to something, and it's easier if they're not necessarily talking to somebody about it. But a very realistic, very simple, very empathetic collections call is way better. We've actually gone in our BNPL offering in a very large way to using AI engines. One of our philosophies has been, don't let the customer actually go late on a payment. So all our reminder calling, all communication to the customer saying, hey, this is coming up, ensure you pay on time, is gone into that. Beyond that, the modeling piece stays true. I think we've only evolved from where we used to be in terms of the machine learning models, but not necessarily very different from where we were 10 years ago.
Yeah, I think that's a great lens and a great digital lens, I could say. Shifting gears a bit, let me also ask you about checkout financing, which is also getting very popular, and it's a daily affair, right?
Yeah.
So why is checkout financing so important in the consumer finance journey, and how is PayU Finance using this as an alternative data for targeting customers?
My favorite subject. All right. So rewind back 15 years. Most of us don't have corporate memories that long, but as a consumer, rewind back 15 to 17 years, and consumer finance went through this cycle. It was a bad word. A lot of large institutions were pulling back from consumer financing, and Bajaj kind of went into that space, and what we saw and what I saw getting built is something that I respect quite a bit, which is the process in which a customer can make a purchase decision. It's a very customer-centric process when you think about consumer financing or consumer durable financing, which is you're at a place, you're buying a TV, and you're looking at maybe a 40-inch TV, and you're trying to figure out if that fits your budget or not, and then you get a chance to be told that you can finance it. In many instances, finance it at 0%, and it's truly 0%, transparently 0%. There are no hidden charges in that, and your purchase decision actually becomes simpler and can even change to saying, why not a 50-inch TV and so on and so forth. In the digital space, what I find interesting at PayU Finance is how I can work very closely with PayU Payments, which is of course for us a group company, for me a payment company, and actually recreate some of these experiences digitally. So can I, at a merchant, while you're in the middle of your shopping experience, can I indicate to you that you can actually buy this and convert it to EMI, and in that purchase decision then aid you to either make a faster decision or change to a different product. By the time you get to checkout, and if you figure out that financing is available, it's almost a little too late, right? So if you get to checkout, you've probably figured out I'm going to use XYZ instrument or whatever it is. If we can aid that journey, then it becomes differentiating. It becomes, in the customer's world, a true value add. That's where I'm looking to play. That's the checkout financing that we are looking to do. And I think, like I said, sitting with PayU Payments and working closely with them makes that difference. But I'm also working closely with multiple other partners on a similar construct, whether it is on the insurance side and being able to say, how does the customer find and drive value. I think India is underpenetrated on insurance. Similarly, on school fees payments, the industry is still very fragmented. It's not really come together. So how do we give viable options such that parents can avail a pay in 12 option for school fees rather than pay upfront? So those are places where we are working on. That's where I think industry and especially fintech industry will truly start adding value in the digital medium.
I think that's very, very interesting, and thanks for sharing all these insightful things. In fact, it's an excellent blend of convenience and intelligence is what I can say. And Deepak, before we end our podcast, one last question. Today's consumer take up multiple, credit lines.
Yeah.
And which is also a risky affair in terms of the credit health. So what are the steps or precautionary things that PayU Finance drives for these consumers to maintain a financial discipline, and ensure a healthy CIBIL score?
Yeah. What is very interesting for me is everybody understands CIBIL score. It's become ubiquitous with how does my credit history look like, and if you ask somebody how creditworthiness related kind of a thing, the first thing you'll get back is my CIBIL score is good. So one of the good things about education is the fact exists. People understand credit bureau. People understand there is a score that they have to map to. I think and I think the last 5 years we've seen a lot of euphoria in lending. Where it's gotten a little bit out of hand is just the number of loans being offered to the customer, and the customer being able to take those. If you go back to what I said earlier, do they really understand what is the total size of the EMIs they're signing up for? So affordability, do they truly understand their ability to repay and discipline on time? And then do they understand stability? How much are they taking? One of the things we've instituted as we've gone through this cycle, frankly, learning ourselves through this cycle, is walking away from offering the customers loans where they have too many trade lines, and in fact going back to them and saying either consolidate debt and get out of some of the debt that you're carrying, or don't borrow more, because in our assessment we don't think you can take more. So we've been actively on that line. The other thing we've done is we've actually walked away from offering a lot of these customers long tenors. So what we went into, and it's a bit of our own secret sauce, so to speak, but everybody does this, is our own micro segmentation. So our granular segments, which goes into hundreds of segments, but then being at that level able to say, for these set of customers, do not offer long tenor loans, do not offer tickets, and for these segments, maybe not the right time. So engage, educate, but do not lend to these segments. So we've gotten to that extent. The traditional stuff exists, right? So the FAQs on how to handle and so on exists, but just went a little bit beyond that into determination and saying just not to be lent, or not to overextend the customers. That's the approach we've taken.
I think that's a great responsible approach as a provider, enabler for a credit access to a consumer. Thanks for sharing that insight, Deepak. And that brings us to the end of today's podcast. Thank you for being with us. It was a pleasure hosting you.
No, thank you so much. It was a pleasure being here.
Wrapping up today's episode, we explored that in this digital-first economy, there are multiple digital platforms that not only provides you credit access, but in a very smarter and safer journey. Whether you are a first-time borrower or repeated borrower, responsible credit behavior and credit awareness is utmost important. In a nutshell, it won't be incorrect to say the credit is not just the power of spending, but it's your control and confidence to make your money work smart for you. At TransUnion CIBIL, we encourage you to opt for your free credit report from CIBIL.com or CIBIL app, which empowers you to be more responsible in borrowing and be credit aware. Thank you, and that was our initiative to help you know your CIBIL.